As goes Norway, so goes the world. This is a quote by Elon Musk from December 26, 2021, referencing Norway's rapid transition to electric vehicles, with almost all new vehicle registrations being EVs. However, at the same time, Elon is snow-cloning the phrase from General Motors CEO Charles Wilson in the 1950s, who said, "As goes GM, so goes the nation," alluding to the fact that GM was so large that the success of the country was dependent on the automaker. At the time, GM was massive and commanded approximately 50% market share for multiple years. However, when new innovative competitors from Japan, such as Toyota, Honda, and Nissan, with smaller, higher quality cars entered the market, they quickly began taking share from the big three and left GM, which is 17% share of the US market by 2016. In the late 90s, General Motors manufactured an electric vehicle, the EV1, but recalled all of them and crushed them into scrap metal, essentially destroying the electric car. Today, GM sells just the Chevy Bolt into the US electric vehicle market, which has been recalled due to battery issues, and production has been halted for the last part of 2021 and will continue to be on pause into 2022. Elon Musk's quote of "As goes Norway, so goes the world" is predicting the future of the world automotive market, while at the same time pointing to GM's irrelevance. General Motors' sales continue to decline year after year, but the company and the country appear to be in denial that this is occurring. We've recently heard President Biden praise GM CEO Mary Barra for leading the world in electric vehicles, and that GM has changed the whole story by declaring that by 2035, GM would be fully electric. Biden even remembers talking to Mary Barra all the way back in January of 2021, less than a year ago, citing the need for electric cars, and now believes that Mary Barra has electrified the entire automobile industry. But in reality, GM hasn't really done anything yet except make announcements for potential targets far out into the future. In truth, all of this credit goes to Elon Musk and Tesla, where Tesla is the worldwide leader and has forced every auto company in the world to start thinking about electric vehicles. In a sense, the contrast here is reminiscent of what Elon Musk's PayPal co-founder Peter Thiel says in his book 0 to 1, link in the description, about monopolies. Thiel analogizes that companies that are monopolies say they have competition coming from all directions. Google, for example, has a very clear dominant position in search where almost all its revenue originates, but instead appears to face competition from Microsoft, Apple, Amazon, and others, not only in search, but in countless other verticals such as phones and email and autonomous driving and shopping, etc. At the other end of the spectrum, there's a typical restaurant which does in fact face competition from all the other hundreds of local restaurants in a city. It's one of the most competitive businesses around. But they'll position themselves as the only Thai-Greek fusion cuisine on the south side of California, basically choosing a very specific niche to be the leader of. Similar analogies may apply in the automotive business. Let's look at Tesla, for example, which has a multi-year lead on every EV automaker and uses the best technology available, most of which is created in-house by Tesla to build the most efficient EVs on the planet. They hold a 63% market share in the US, 7 times that of GM's 9% share, absolutely dominating the markets where they have an operating gigafactory. However, Tesla is up against every single automaker on the planet. They not only have competitors in the vehicle space, but also in batteries and solar and charging stations and software. Tesla even posts its market share relative to the entire auto market in their quarterly results, showing just under 2% share in the major car markets of the world. On the other hand, General Motors lags in every single one of their markets. Their strategy for keeping up with changing markets is all but a number of announcements taking place years out into the future. The company not only faces serious competition from Tesla and other EV makers moving faster than GM itself, but must also manage phasing out its ICE car business and dealerships and pensions and unions that will put immense pressure on the company, as witnessed throughout GM's bankruptcy during the 2008 recession. Yet GM claims to be the leader, electrifying the world, and even has the president on board praising GM for something they didn't do. They appear to vastly overstate themselves, which may have advantages in terms of getting others such as investors and customers and suppliers, etc. on board the GM story, but this is a critical time in GM's history where the rest of the industry is working as quickly as they can to replace GM's entire ICE car business with EVs. Execution will be critical as the market is waiting impatiently to see the results. As the shift to EVs accelerates, GM sales have been collapsing. GM's electric offering, the Chevy Bolt, is not being sold in the US currently due to battery fires. The company, along with others in the industry, have been blaming supply chain and chip shortages for a dip in sales, whereas Tesla is on track for an 80% increase in electric vehicle sales this year, even though they are fighting supply chain issues and chip shortages, yet EVs use about 10 times as many chips as a gas car. GM believes that they are the leader in the China EV market. They have a partnership with state-owned SAIC and Wuling, as US companies have not been allowed to operate wholly owned factories in China. Tesla has changed this narrative and currently owns its entire electric vehicle operations in the country. However, General Motors' joint venture sells a $5,000 to $10,000 electric car, the Wuling Mini, which has delivered hundreds of thousands of units. Over 344,000 units have been sold so far in 2021, just not including the month of December. As mentioned, these vehicles are priced far below regular cars and don't generate nearly as much revenue or profit. A regular EV could sell for 10 times the price, meaning that a company like Tesla generates far more revenue even with lower volume, except that Tesla's volume is actually higher. Now, GM only owns 44% of the joint venture, therefore it can't count the entire number of unit sales as their own. The Wuling Mini would also not be road legal in many parts of the world, such as the United States, as it lacks safety components and doesn't follow the standards for American roads. It almost seems as though GM calling themselves the leader with this vehicle would be the equivalent of Tesla being the leader in counting sales of its kids' ATV made by Radio Flyer, which is actually comparably priced. And by the way, stop using Yahoo Finance, stop using Google Finance, and have a look at our website, themarketisopen.com, where we have instant stock quotes and financial data going back 10 years, and it's all freely available. Now, in October of 2021, Mary Barra told CNBC that GM can absolutely catch Tesla by 2025. This implies that GM isn't in the lead if they are trying to catch up to a competitor. The company is targeting 30 new EV models globally by 2025 and is looking to boost spending to $35 billion, aiming for 1 million vehicles annually by 2025. This is approximately what Tesla's run rate is currently. Also, the number of vehicle models or the amount of money spent doesn't necessarily translate into higher sales. Arguably, spending billions upon billions of dollars hurts GM's cash and debt positions. Elon Musk has recently stated that Tesla is planning to spend $10 billion on their Giga Texas factory over time, and this factory will likely do far more than 1 million vehicles per year on its own. Since Tesla is able to focus its efforts on just a small set of vehicle types, they can be more nimble in making changes and managing different vehicle configurations, especially when it comes to the intricacies in a world of autonomous driving software. Moreover, General Motors expects to double revenue to $275 to $315 billion by 2030 by offering software and services. They believe that their consumers are willing to spend $135 per month on additional products and services. According to TechCrunch, they offered 45 different feature and service options to consumers and were pleased to see consumers choose packages of 25 of them. This is strange since Tesla has been working hard over the years to eliminate different package options and limit the number of choices to be made when purchasing a vehicle, which seems to speed up the ordering decision and process, reduces confusion, and is likely easier to manage post-purchase with fewer permutations. By 2030, GM is also looking to have 40 to 50% of its fleet become electric. This may be 5 years late when compared against investment firm ARk Invest estimates, which are targeting a 40% share of EVs by 2025. GM is only aspiring to exclusively offer EVs by 2035, for which they say depends on regulation, infrastructure, and other factors needed to come together for the plan to be achieved. When interviewed by Morgan Stanley's automotive analyst Adam Jonas in October, he asked Mary Barra, how do you exit a business, referring to the ICE vehicle business, that today accounts for basically 100% of your profit and cash flow? She replies by saying, well, we've got 14 years. Now, it's critical to note that this 14 years is General Motors' target, not the market's. The market isn't going to sit back and wait for GM. It wants electric vehicles yesterday. And so it's likely that GM doesn't have 14 years to move at their own pace, while a company like Tesla is viewing the situation as if an asteroid is about to smash into the Earth unless they convert all the vehicles into EVs. In other words, for Tesla, this is their mission and it's of the utmost importance. For GM, well, they have 14 years to procrastinate. Now, it almost appears that GM knows it's far behind, and they've known for quite some time, but haven't done much in accelerating EV adoption, but perhaps have done a bit to slow it down. Back in 2017, it was reported that Mary Barra instructed her supply chain to use Tesla suppliers even if they cost more. If true, this was an attempt to derail Tesla by bottlenecking their suppliers, especially during a critical time when Tesla was low on funds and constantly faced the threat of bankruptcy. Today, this appears to be quite ironic because Tesla now has deals with all of the major battery manufacturers around the world, including long-term supply deals for materials and components related to their battery supply chain. Tesla is planning to also produce its own advanced 4680 battery cells. Again, batteries are one of the major bottlenecks for EV production. Tesla has basically sucked up all the available resources for themselves. The tables have flipped, and GM appears to be stuck with inferior batteries that may explode. However, GM will move forward by relying on its new battery platform with its Ultium batteries. It will still be partnering with LG on constructing its Ultium battery plants and manufacturing Ultium batteries, which take the form of pouch-style batteries. Pouch batteries have the advantage of being horizontally or vertically stacked, which doesn't seem like any major advantage. But the batteries in the Chevy Bolt that were catching fire were also pouch batteries, but the Ultium ones will be larger. However, Tesla CEO Elon Musk has commented on pouch batteries as recently as September, saying, "Probability of thermal runaway is dangerously high with large pouch cells. Tesla strongly recommends against their use." He also said a few months earlier in July, large pouch cells undergo significant volumetric changes at high state of charge. Even so, fire risk is probably less than gasoline cars. Now, Inside EVs estimates GM's Chevy Bolt battery pack costs at $175 per kilowatt hour. Their new Ultium batteries aim to bring this cost down by more than 40% to about $105, with a future second generation in the works to bring that to $70, which is about 60% cheaper than Bolt prices. For reference, BYD's Blade batteries use the most popular, cheapest LFP chemistry and are targeting about $63 US currently. It's likely that Tesla's 4680 LFP batteries could approach this cost as well, with both using cell-to-pack technology. While the industry's battery material costs have jumped up due to inflation, it seems that GM's upcoming Ultium target efficiency will still be roughly 30% to 40% more expensive than Tesla's battery packs. GM is also touting its skateboard architecture, which is about 10 years behind Tesla and is now outdated. Tesla has now shifted its design to a more efficient and lower-cost structural battery pack, which will be the new industry trend given its superior economics. GM's new Hummer EV and Cadillac Lyriq will be the first vehicles using GM's Ultium platform. Again, with new technology comes added risk and delays. In 2022, we'll see if GM will be able to ramp to its 30 gigawatt-hour anticipated annual capacity, and if Tesla can ramp to its own 100 gigawatt-hour in-house production target. General Motors is also seeing some shakeup at its Cruise division. Dan Ammann, chief executive of Cruise, just presented at GM's Investor Day, saying GM would have 1 million autonomous vehicles on the road by 2030. The company believes that it can grow revenues from $140 billion to $280 billion by 2030, and Ammann was confident that $50 billion of that increase would come from Cruise. Ammann has played a key role at GM, becoming treasurer in 2010, where he helped manage the company's IPO. He became the CFO in 2011 and the company's president in 2014. Ammann helped with the 2016 acquisition of Cruise and was closely involved with its leadership, helping to grow the company from 40 employees to about 1,000. It's said that during his 10-plus years involved with the company's leadership, he's also led GM to transition its focus to electric and automated vehicles. Clearly, he has been an important figure at the company. But on December 16, 2021, he abruptly left General Motors, with the CEO not wishing him farewell in his new ventures, as she's done with previous executives who have left. It seems like he may have been pushed out. GM hasn't shed any detail on this change, which affects their autonomous vehicle business at a time where competition from Tesla is heating up. GM has demoed Cruise in the past, except the video is played at high speed, and Kyle Vogt, the founder, now interim CEO of Cruise, stated that the company uses remote operators which appear to help move the car when it gets stuck. That said, on December 20th, a new report from Bloomberg stated that Ammann was dismissed due to a disagreement with Barra. Mary Barra wanted to keep Cruise in-house and use its know-how to apply self-driving technology to its products, including the new production Cadillac, whereas Dan Ammann wanted to spin the company off in an IPO and keep it focused on launching its own self-driving robotaxi business first. As quoted by Bloomberg, when Ammann didn't fall in line with that vision, it was over. Now, when the major automakers originally hopped on the EV bandwagon, it seemed that they were looking to make EVs that would have a low chance of cannibalizing their gas car sales. That's why Ford started with an SUV Mustang that wouldn't affect actual Mustang sales, and it looks like this is why GM picked the Hummer, which wouldn't really affect its top-selling pickup trucks. Now that EV adoption has hit an inflection point with manufacturers not being able to keep up with demand, this appears to have been a mistake. The Silverado is GM's best-selling pickup truck. Their competitor, the Ford F-150, will have an all-electric version, but GM will only be announcing an electric Silverado at the upcoming CES event at the beginning of this year in 2022. In October 2021, General Motors stated, during the third quarter, GM's retail share of the full-size pickup truck segment grew more than 2 percentage points, with the Chevy Silverado and GMC Sierra reaching a combined 38% share. So the Silverado and the Sierra are GM's best-selling trucks, but instead they're starting with an electric Hummer, which lived its previous life as a gas guzzler, and its EV form will be a 10,000-pound truck with a massive battery required. The Hummer is not the right vehicle, especially as the pandemic has kicked supply chains around and vast amounts of batteries are scarce at this time to begin with. Therefore, GM will likely not be able to produce many Hummers. This also leaves their lucrative pickup truck market wide open for an attack by other automakers, especially Tesla, to take massive amounts of market share with its Cybertruck, a truck that's been delayed as Tesla prepares its battery capacity, which may hit the market with a force in 2022 as Tesla's 4680 cells ramp up. If Cybertruck has the potential to disrupt Ford, their primary target, it could certainly disrupt and collapse GM's share. So do you think General Motors will be able to navigate the transition to EVs within the company's target of 14 years? Or with Tesla's Giga Berlin and Giga Texas nearing completion, do you think GM will be disrupted by its faster EV competitors? Please hit the like button and subscribe. We would really appreciate that. And a huge shout out to all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.